People say my timing was good.
I'd say it was
but
as well.
Dumb luck also plays a role here.
You said in the past, Pete, that you've been humbled by the magnitude of this crisis. Give me your assessment of where we are right now.
I think it's the most serious long-term crisis I've seen. The American public keeps being told about $11 trillion of public debt. They don't tell them that the total promises we've made are not 11 trillion, they're $56 trillion. That's as much, Maria, or more than the net worth of all American households. Taxes would have to be doubled to cover these. We're not talking about the long-term structural problems, but trust me, foreign lenders are going to begin looking at them.
Well, already we're worried about the Chinese. We're worried about Russia, a move yesterday by the Russian central bank to broaden into IMF bonds. What are the implications of this?
Well, imagine that you were a foreign lender and you would look at our current situation where we're talking glibly about $2 trillion worth of deficits. And then suppose they looked at the longer term, which are much, much bigger than anything the American people are being told. I think the most likely next crisis is a loss of foreign confidence in the way we're running our affairs.
So what do we do? How do we change this or offset such a move?
Well, if I were God or president or whatever, I would start talking to the American people honestly about these structural problems. Social Security, for example, is something that could be fixed quite easily and still maintain that safety net. We would, my foundation would propose a bipartisan commission with everything on the table, taxes, Medicare, etc. But we've got to convince the capital markets that we understand the long-term predicament we face. And we're not talking about that now.
Well, with so many changes and sort of questions about some of the policies coming out of Washington. In fact, you know, we've had a number of people on the show saying, look, we need investors to believe in the public markets. And when you have a situation like what went on with the automakers, Chrysler, people are not sure if the rules are going to be changed. How would you advise the administration to speak to investors who really need to have trust and confidence in these markets so that we can finance our debt?
Well, one of the reasons I think they ought to take serious action on the long term is nothing would build confidence in the markets than taking on Social Security and Medicare and showing the American people that you're capable of making tough choices. One of the reasons this president's support is falling on the domestic is the American people do not believe you can keep spending this much and borrowing this much and saving so very little and depending on foreigners to finance this.
Well, let me ask you about some of the other policies. Today, we're talking about a new compensation czar. We're talking about government having big ownership in business. How do you feel about this? What should be done? First off, the compensation czar. Give me your thoughts.
One of my favorite words is from the Latin and the Greek called iatrogenic, meaning caused by the doctor. When the government gets involved in compensation, it typically creates side effects that are worse than the original problem. Have you forgotten 1993 when they put a limit of $1 million on cash compensation because they were going to hold down the compensation?
What happened?
Guess what happened? Stock options doubled as a percent of the total equity.
Right.
They didn't expense options, but they managed to get tax deductions for options, and executive compensation grew 10 times faster in the next 10 years. I think there are real possibilities of iatrogenic effects if we start playing around with compensation.
Yeah, but Ken Feinberg, who's going to be joining us in about a half an hour to talk about his new job as pay czar, is going to say, look, we're looking at total compensation, so we're not going to allow overall compensation to grow the way it did in that period because of the stock options, right?
Well, I think they have a perfect right to do that where government money has been lent to them. But I don't understand on what basis they would try to manage compensation of private public enterprises.
Right. They want to put recommendations out there for all companies.
Well, I think if they want to urge boards of directors to do what I think they ought to do, have them set compensation on long term, on performance metrics, You know the Wall Street thing a lot better than I do, but you know what happened on the trading floors. They would, quote, make a profit by whatever they marked the securities.
Right.
You take out cash, and then 3 years later you find out you didn't make money, you lost money. So what I think ought to happen is on Wall Street and other places, the boards of directors are, let's talk about performance, let's talk about long-term, and let's be sure the results are in 3 or 4 years from now, not today.
But get government out of there when it comes to decisions on pay.
Leave it to the board of directors. Yeah. That's their job.
You also have the issue of ownership of business. The administration, Treasury owning 34% of Citigroup, a large, obviously 80% of AIG. What do you think the government's exit strategy is?
Well, I'm a little prejudiced because I chaired the New York Fed when we picked Tim Geithner, and I think he's a very smart guy. I can't believe Tim Geithner wants to keep owning these companies, and I think he's going to be very, very happy when they have an exit strategy and do a public offering or sell their position to someone else.
So you believe they will step aside?
Oh, I think they will step aside as soon as they can.
All right, we'll leave it there. Pete, great to have you on the program. Congratulations on the book once again. We appreciate you joining us. The Education of an American Dreamer is the book, just out. Inside the World of